Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox. On Friday the 7th of October, now it's Nonfarm Payrolls Friday. Markets have been volatile this week, but in the run-up to payrolls, a little bit of a consolidation. But we'll see how the impact of all this volatility is playing out through Forex markets. I'm looking at the sterling dollar chart, also looking at the oil price, which is trying to break out that move higher following OPEC, and also the S&P 500 futures, which have started to roll over slightly again. So looking first of all at this cable chart, we've had this strong run higher, and I spoke in the last video about how markets react to the first sign of selling would be the key factor here in these Forex majors. And yes, it's interesting that the market sold off on Wednesday and again decisively lower yesterday. Strong candle to the downside, still got volatility, a little bit of a consolidation today. But this is worrying, because if you come out here, you can see that this big downtrend is still in play. The market basically just unwound back to the overhead supply from the old September lows. The breakdown points of around 1350 to 1450, it hit a high of, I think, 1490 before falling over. And it just looks as though that this is a market primed to fall back lower again. I think on this chart, it certainly looks as though that on the RSI, which unwound to 50 and then has subsequently fallen over, and it just looks as though that this is a market now starting to build a new trend lower. Look at this run of higher lows and higher highs in the recovery, but now we've seen a lower high being posted at 1385, also a lower low as well. So it starts to build this new trend of lower highs and lower lows. You've got the moving average on the 4-hour chart, the 21 period moving average there, just rolling over. And I think if the market fell below this reaction low that you've got here at 110.20 area, so basically if you see a 109 handle on cable, that is basically a sell signal, because that was the first key higher low really in this recovery. That if that gets broken, that really does confirm that move to the downside, I think, once more. So that would be the risk there, and then you start to think about further moves to the downside. Onto this oil chart, what we've seen is the run higher since markets have been talking about the OPEC Plus decision to cut production. It was 2 million barrels per day production cut, although in reality it's around about 1.1 million, but still the production cut is pretty large, and subsequently we've seen the oil price running higher. Now on the technicals, we can see that the test of this resistance overhead, the overhead supply between these old lows that came in around about 95.90 up towards 96.60 was a reaction high. And that is now being tested significantly by yesterday's candle and also this morning. But look at this RSI breaking above 50. This is sort of breaking this trend of where the reaction highs falter around that 50 mark into the 50s and looking to test for a breakout above 96.60. If you see a closing break above 96.60, that would be the first key lower high of the sell-off being broken. We've already seen the downtrend being broken, and now we could see a first key lower high broken as well. So this is key moments here for this chart. Also looking here at this 55-day moving average, it capped the resistance back in August, and again it's resistance now. So this is a really key moment, really big crossroads moment. I think a decisive closing breakout above 96.60 is a key break to the upside. You then start to think about moving towards the next resistance, which comes in around the 104, 105 area. So obviously the next target from 96.60 is $100 as a round number, but then you're looking at 104, 105. In terms of your supports, well, the higher low at 91.90 is important on a very near-term basis, 93.50, 93.60, but certainly it looks like the recovery is still going, but a breakout above 96.60 would be key. And finally, S&P 500 futures, we had a sharp move to the upside, big bullish engulfing candle, bullish key one-day reversal earlier this week on Monday, and a strong move on Tuesday. But since then, we've been sort of consolidating and falling yesterday. But looking on this 4-hour chart, you can see that this is a key support here at 37.35. If that gets broken to the downside, and already this morning it looks like it is breaking that as we speak, it sort of starts to top out. We're seeing the momentum on the 4-hour RSI turning lower. There is downside potential in that move. So this is a worrying moment for equity markets. This recovery that we've seen that basically has not really gone that far already. We're starting to think about lower highs being posted at 38.19 as a key resistance there on S&P futures. But moving below this reaction low, you can also see that was sort of 37.50 to 37.35. That was old breakout and became supportive on Wednesday. But again, if that gets broken to the downside, that really does bring the lows back into play, 35.71. And look at this turning lower on the RSI here on the daily. It doesn't look great, failing underneath 50. So yeah, really is quite worrying times once more developing if you see a decisive closing breach below 37 at 35. So I wish you good luck in your trading today. Thank you very much, everyone, and I'll speak to you soon.